I've been working with people for a long time, both traders, friends of mine, and through my educational product. And I found one of the biggest challenges people have is selling. And it's on both sides. It's selling to the downside and selling to the upside. And we can cover the downside first. Is that my theory is you put in some time, let's say, to research a stock, to buy a stock, although some people don't research it all and will throw 40,000 into a stock that someone tweets or whatever, but that's a whole other story. But my point is that people have no problem buying a stock, or let's say you've researched the stock and then it starts to turn against you. And I think the biggest challenge is fear, because it's a lot of things that are moving parts, which is, but I put in my research and I feel that this is right. And it's a little bit of ego, a little bit of finality. And I think the biggest one, though, is what if I sell and it turns around?
Right.
That is one of the biggest fears that people have. And I've kind of come up with just a couple of comments to that. Is number one is you just have to accept you're not going to be right on every single trade you put on, because you can't assume everything you buy is going to be the next Apple or Amazon. There's been tens of thousands of stocks that have traded, let's say in the past, 20 years. There's not that many that have just been amazing winners over the past 10 years. So you can't assume everything that you buy is going to go higher and is going to work out. And the other thing is, let's not forget the ones we sell that go lower. For example, Fastly is one that I've talked about. I was in this one during 2020 and I got stopped out somewhere around 100 to 110. If you pull up a weekly chart, somewhere in that range. And it did very, very well. This is an example of a lot of the pandemic names that did very well, but it corrected down to $8. So if I didn't stop myself out in the low hundreds, that would have been a significant loss. So in other words, we tend to want to focus on the ones we sell that turn around, but we forget the ones that we sell and go lower. But the bottom line is you have to have some sort of sell discipline. Whether it's a number of points down, I'll sell it when the stock drops 5 points, 10 points, whether it's percentage, whether it's a technical stop, you have to have some sort of sell discipline to prevent a major damage to your portfolio when bigger corrections come. And also, I'll default to studying the best ever through Market Wizards and anyone else. Their number one common theme when you do study the best traders is cut your losses, cut your losses, cut your losses. So if the best are saying that, I think it's wise to have some sort of sell discipline on the downside.
Yeah, it's funny that you bring up Fastly, because I was in this stock in 2020, and it sounded like the most amazing story too, right? Edge computing, and this is where everything's
so
going.
Easy to fall in love with these stories.
Yeah, exactly. And so I highlighted a couple of times where I caught some of that initial run, and then it gapped down, I think, on earnings, and so I was forced out of it. It started working again, formed some kind of base. I got back into it, and then I got caught in the next earnings, and it gapped down. I had to cut at that point. Honestly, and after that, I was like, I'm done with this. The stock is too gappy. I haven't looked at this stock actually in a few years, so I'm one of those people who have forgot about this. I didn't realize it got this low. But one of the things that I struggled with initially with the cutting losses is you have to admit you're wrong.
Yeah.
I mean, so how do you kind of get over that initial thing that you don't always have to be right in the market?
I think it's just you learn that lesson quickly. I just think of one word is it's just you accept it. That's it. You have to accept that you're not going to be right on everything. I know your colleague David Ryan has used the word humility, which makes a great trader. And it's a little bit of that. It's accepting a combination, just being humble, accepting you're not going to be right on everything, and realizing that at some point, whether it's because you're wrong on the stock or maybe you're right on the stock, but the market's heading into a bigger correction. And at some point, you just have to accept you're not going to be right on everything. And I think it comes with, hopefully, unfortunately, learning that lesson many times and then hopefully making that adjustment.
Yeah. And I've got to tell you, I think this kind of mindset has been huge for supercharging my performance over the last couple of years, and just the thinking that I can always buy it back. I don't have time to spend on the, worrying about, okay, is this stock going to come back? I feel like that can make you spiral, because then it just puts you in, if you're down and digging a bigger hole, that's just not putting you in the right mindset to succeed. You're going to start getting sloppy, taking bigger risks, continue messing up. And so if you just move on, you can always get back in. And there are a number of trades that I've made this year, when we had that little intermediate correction, followed my sell rules, they were winners for me, got out, but I got back in. So I think that's the willingness too, is maybe you are wrong and that is the top and the sell rule got you out. Great. But if you are wrong, if it sets up again, you can always get back in, right, Joe?
Oh yeah, that's a great point. This isn't just selling with finality and taking the loss. It's just maybe the timing isn't right, and if it sets up again, you can always get back in. I think that's a very good point as far as being flexible with the markets and with your ideas.
We all have to learn the hard way, or at least I had to learn the hard way why you cut your losses, because those first few trades I did 20 plus years ago, I ended up riding them down like 80%. And so I was like, okay, that's why you have an 8% loss, because 8% is a lot better than 80% loss. But what I've found that's taken me a lot longer to learn, and I'm still learning it, is that offensive selling, because finally, because you're wrong a lot, as you said, you're wrong a lot in the markets, but finally you have something that's working and you're up on it, and it becomes, I've found it becomes a lot harder to kind of sell and get out of that stock because you're finally right.
Yeah. Before I forget, on the downside, I just remembered another thing is that a lot of people came to me after the bear market in 2022 that said, unfortunately, they had 50 to 90%, losses in their portfolio.
Wow.
And they came to me and they're like, can you help me get my money back? Now, I'm not Fed Chair Powell. I don't have a money printer, so I can't help you get your money back. But what I can help you do is prevent those from the future. Because, like Peter Lynch says, over the cycles of time, this X amount of bull markets and bear markets, one thing I can guarantee is we'll have another bear market. I just don't know when. So when it happens, you have to have some sell discipline, whether it's the 10-week moving average, the 200-day if you're longer term, at least something to prevent that. So I wanted to say that before I forget. But as far as the next section on the upside, that is a lot more difficult. That is a lot more difficult because, again, I use that word acceptance. You just accept that you're not going to get the high. You're never going to get the high. You just accept that and be okay with a gain. There shouldn't be FOMO if you made, let's say, 20, 30% on a stock. There shouldn't be FOMO because you made money. What are you missing out on? FOMO's when you're not in it. So there shouldn't be any sort of fears. However, there's usually that common fear. If on the downside, what if I sell and it turns around? On the upside, what if I sell and it goes higher?
Yeah.
So another solution to that is sell a little bit. It doesn't have to be all or none. If you have 100 shares, you can maybe sell 10, you can sell 25, you can sell 50, sell a quarter, whatever of your position, because many people feel when they get into a stock, you have to buy it all. When you sell, you have to sell it all. And you can do partial trades to get in as well as on the upside.
Right.
A perfect example is some fund managers in their mandate, whether it's an ETF or mutual fund, they can only have 5 or let's say 10% of a position is the max that they can have in their portfolio. So they're not selling because they don't like the stock. They're just selling because if a 10% position runs, 20%, now it's 12% of your portfolio. They just reduce it back down to 10. So if as an individual trader, you don't have that mandate, but if a position gets to be too big, you can reduce it down to that original position if it's working out for you.
Now let's talk about an example and walk through, Joe, a trade that you took. I took this trade too. Uber was a nice winner from around that November follow through day. So talk to us about how you handled selling this winner.
Yeah, so this was one I was on, I believe, November 1st. It was right on the follow through day. I got lucky that I was on a follow through day. And O'Neill has a rule on a follow through day, look to buy some of the leaders. And I'd like this name, and it was getting back above the 50-day. So I took a position in this one, and I actually added to it. Another lesson here is when a lot of people say, okay, I have problems averaging up, a great way is when it visits the 10-week.
Yep.
So that's when I added to the position on the visit to the 10-week in January during that pullback in early January. Stuck with it. I had a time frame. This is what I mean by no matter what your time frame is, get that strong entry point. By getting in the 40 to 45 range, I could sit through, 65 down to 57 or 70 down to 62. I can sit through that because my entry point's in the 40s. You can deal with normal price action and normal pullbacks to the 21 day into the 10 week. And then I stuck with it, and it was hanging around there, around that 80 range. And then eventually in April, when it broke through the 10 week, my rule is a decisive close through the 10 week, somewhere around, let's call it 70 to 73 in that range, call it low 70s. I forget exactly, is when I decided to get rid of the position and sell it. So net, it was a great trade. But that's just sort of a way, when you take a step back, use a weekly chart, relax a little bit, that's a way to take some of these winners for longer than you can expect by using that 10 week as your guide.